Well, plenty to unpack, so let's get right into it. I'm joined live via Skype by Sara Hsu, CEO of China Rising Capital Forecast and a visiting scholar at Fudan University. Welcome back to the show.
Thanks, Rita.
So a lot of data there. We saw stocks in Chinese mainland surging. September's Taishan Market Services PMI came in at 54.8. And of course, the yuan hitting a 17-month high against the dollar on its first trading day after the national holiday. When you look at all these different factors, what does this indicate about the health of China's economy and recovery?
Well, it shows that China's economy is really recovering. And, it seems like China's economy was doing well in terms of picking up manufacturing after coronavirus. It was starting to do better and better. But at the same time, we were seeing that demand for retail sales was lagging behind. And so it seems like this final piece of the puzzle has started to, come into play. And, we saw people, as was shown in the last clip, going on vacation and spending a little bit more money. Still, the tourism revenue only matches about 70% of that of 2019, but it's a lot better than, China has been doing in recent months. Looks like retail sales are starting to come back. And so now the stock market is doing well. Looks like China's economy is really well on its way to recovery.
Now, will Beijing let the yuan rise higher? And what does having a stronger yuan mean for China's economy and its trade picture?
Yeah, I think, a lot of analysts have suggested that the yuan is most likely to continue to appreciate, especially given a potential Biden administration in the U.S. And this type of change in American politics may result in a diminution or potentially even an end to the U.S.-China trade war. And so that's why the currency is really rallying. Analysts project that this could go all the way down to 6.5 renminbi per dollar, which would be a considerable amount of appreciation. That's according to Goldman Sachs. There are dangers of this occurring because China still exports a decent amount of goods. Right now, it's at about 17% of GDP, or it was in 2019.
Right.
And so when there's too much renminbi appreciation, then it becomes more costly for people overseas to purchase Chinese goods. So that's a danger.
Now, I want to look at the evenness of the recovery, because some analysts have said that the recovery has been better in bigger cities like Beijing, Shanghai, and Guangdong, much less so in second and third tier cities. Why the disparity, and what's really needed to improve their outlook?
Yeah, so it seems like there is a real difference in terms of risk aversion among people who have less money. And it makes sense because low-income people who tend to live in lower tier cities, the second and third tier, fourth tier cities, they tend to have lower incomes than those of first tier cities. And so they have become a bit more wary of spending. So have small and medium-sized enterprises in terms of, fully getting back to work and taking out loans and things of that nature, simply because of risk aversion. And that has everything to do with COVID, as well as the international political environment with U.S. and China at odds. And I think that, what we will see is that starting next year, especially if there is a Biden administration, especially if they get rid of or slash those tariffs, that we'll see a lot more people in those smaller tier cities starting to spend. And as coronavirus seems like it's really subsiding.
Obviously, a better trade picture would also be good for Chinese businesses, but at the moment, they're also borrowing less. How concerning is that?
It's concerning, but again, I think it really does reflect the risk-averse nature of the economy at the moment. And in addition to that, once we see a lot of the larger companies going back to business, they have linkages with these smaller and medium-sized enterprises that tend to be the ones who are not borrowing as much. If those larger manufacturing enterprises are not signing up as many SMEs, small and medium-sized enterprises, to carry out part of the manufacturing because they don't have quite as many orders as they did previously, then they won't be borrowing as much for working capital. And so the small and medium-sized enterprises in some ways are really a bellwether of how the economy is doing. And so by mid next year, I think that they will be fully back up and running, given that coronavirus is over and with a potentially likely Biden administration.